So hello traders, welcome back to another episode of the technical breakdowns. So today is on Wednesday. Today is Fed's day, the second day of November. Last month we saw one hell of a bullish move in most markets. The dollar also got a little bit softer. I'll explain to you some of the reasons for some of these moves when I get down to the technical breakdowns and explain what is going on. We've also gotten a couple of questions or concerns on why we have not been posting the videos, and we have been working on switching and moving our offices from where we are currently located, and that means that we may not have as much time to focus on creating content fully until we fully transition to that office. So bear with us as we try and expand the space to be able to accommodate more people because of the interest that you guys have shown in the material that we are offering and the content that we are sharing with you guys. However, we appreciate the concern, and we do promise that once we move to that office, we will be back to consistent releases, especially on time, which will be even better. That one I can somehow promise. So I'll go down to the technical breakdowns, but before I go down to the technical breakdowns, let's look at what is happening in the fundamentals skip. In the fundamentals, we have seen now that central banks are sort of turning from a very hawkish tone. They're becoming a little bit softer, and I think markets have started pricing in a dovish tone from all central banks. The Bank of Canada, which is the Central Bank of Canada, was the first one to announce that they won't be hiking by 50 basis points, and instead they went to 25 basis points. The Reserve Bank of Australia followed suit, also going down to 25 basis points. Today we expect a 75 basis points from the Feds. I think markets have already priced that one in. But I think what is more important is not really what the Feds will say, but not what they'll announce today, which has already been priced in, but what they think is the path moving forward. What is their dot plot? Do they see more hikes? And if they see more hikes, how aggressive are they still planning to hike? According to markets, or at least by looking at markets and how markets are behaving, it looks like markets are pricing in a rate hike not above 4.55. So I think there's a high chance markets have already started sort of turning. Last week we saw Bitcoin closing above 20,000. So we've seen some comeback in markets a bit after a long decline for I think pretty much the whole of 2022. This last quarter looks like a positive quarter, unlike the other quarters where markets have been jumping higher. So with that said, I'll go down to the technical breakdowns. I'll start off by looking at the main markets that I normally trade. So I only look at about 6-7 markets. I don't pay attention to very many markets, but I'm sure if you use correlations and you try to understand what I'm thinking of different markets, you can be able to use this effectively in your own personal trading. So starting with gold, I'll start from the weekly perspective. On the weekly chart now, we've gotten about 3 or 4 weeks of consolidation at the 1650 level. We jumped higher, rejected 1700, came back, rejected 1650. And I've gotten 2 weeks where markets have really struggled to go below the 1650 level, 1645 level. Now what do I think? I think there's a high chance these markets will start coming back a bit, probably to 1700 as my first target. So I'm very keen on what will happen at 1700. I have this sort of a pattern formation which suggests that markets are likely to come back around 1685, 1687, 1690. I'll be watching what will happen on this channel formation. If we get a bounce at this level and we start seeing a decline, probably we'll see 1600, who knows. But if we take out this level and we move higher, we will see 1700 and probably keep on moving higher. So it's a question of patience, just waiting for markets to move and then positioning yourself. If I go down to the 4-hour chart on this one, I don't have a candid pattern that is showing where markets are likely to go. Instead, I'm relying on my levels. So I can see clearly we're now trading above 1650. After a long stretch below 1650, now we're back above it. So I don't think these markets will go below 1650 again. What I think instead is we are likely to see 1675 and probably even 1690 as markets try to tap into the 1700 level. So that is my outlook on gold. Nothing really much to be done there other than being patient for a clear pattern, at least from my perspective. As much as I have the direction, I have a specific pattern that I'm looking for when I'm trading. So oil has been quite expensive. The other day I saw Biden blasting out oil companies for record profits. That means that he's not very happy with record profits on companies as the consumers are struggling. However, if we just look at the chart and forget what Biden said, it's quite clear oil still has some upside. Last week we had a good bullish close after this comeback lower. In the previous 3 weeks, we had seen a very strong rally after OPEC announced that they were killing about 2 million barrels from the market. They were not going to produce that much, so that will mean that oil prices will probably move higher a bit. But on the lower time frames, on the daily chart specifically, I'm still watching what will happen with this channel formation. If we still remain below this channel formation, maybe we'll see some soft landing on oil. We could see markets coming back to about 80, 77.5, probably even the $75 a barrel mark. But at the current moment, I don't see any clear pattern on the lower time frames specifically to tell me to be in the market or outside the market. So I'm sort of just patient, waiting for what the Feds will say today, looking at how the dollar will react and looking at how the general consensus of the market will be before I can position myself in this market for either bullish or bearish plays. The next market that I'll look at is the Dow. I think the Dow is quite interesting. If I look at it from a weekly perspective, the last 2 weeks we saw a very big jump from about 30,000 to trade now as high as 33,000. That means there's an influx of buying in stocks, and that could mean that the turn from a hawkish Fed to a dovish Fed has resulted in these jumps, meaning that the environment is getting a little bit friendlier for most people as investors. But on the daily chart, I'm watching this sort of a channel-like formation, and specifically trying to understand what the Feds will say today. I think what the Feds will say today have a huge impact on where these markets will move, at least short term. So I think there's a high chance we'll still tap into 33,000. And if we tap into this level, I'll be looking for correction back to about 31,500. That's the first target. But if these markets continue sliding lower, I think there's a high chance we will hit 32,000. So if I come back to the 4-hour level, you can see clearly I'm looking for correction back all the way to about 32,000, this fair value area, before I move to the upside. So I'm very keen also in this play to see how to position myself in this market for this trade. So that is my second outlook. This is the Dow. The next that I'll look at, the next market that I'll pay special attention to is the pound. The pound had a slight collapse, moving all the way from about 1.4 to trade at 1.05, getting close to parity. But over the last few weeks, we've seen the markets rebound a bit, about 1,000 pip move from about 1.05 to higher than 1.5. What do I think? 1.15, I mean. I think markets are pricing in a move back to 1.2, 1.25 as the dollar gets softer. I think the pound is likely to keep on moving higher. On the daily chart, this is the pattern formation, so you can see clearly markets have sort of come back a bit, resulting in the formation of higher highs and higher lows. I'm looking for a correction back to fair value before executing this trade to look for the 1.175. This is one of the best setups that I have for the week, but I'm not sure if it will play out this week or next week. Tomorrow we still have Bank of England. We want to see what they'll say about their policy. Today we have the Feds. I'm solid that these markets may not move much, at least till next week. We may see some sort of moves, volatile moves, but not really directional moves. But I think when next week opens, we may get some direction coming into the market, and I think that's when you should be positioning yourself for good trades. As at the moment, I think it's right for you to be out of the market, or at least how I trade, because I want to be in the market for some significant moves. I just don't want to experience the volatility of the market. I don't see why you should be in the market when there's so much risk coming from those fundamentals, as much as you may have a clear perspective on where things are going. So in the short term, I'm still looking for this correction back for a potential third bounce here before continuation to the upside, the 1.175, 1.1875 level, which is the next upside target. The yen is getting a little bit softer also. For the first time, we've seen the yen come back now from about 147.5. We're approaching 155, which was a level I was looking for. I think I was looking for a potential move to touch 150 on the upside. I'm very keen to see if we'll break below 145. Failure to which, I think I'll be looking for this last leg probably to 150, which is the next upside target. As the dollar will be getting softer, I think the yen is likely to start climbing higher a bit. It's an inverse trade, obviously. If you look at what was happening on dollar yen, I think a reversal has started. I'm just want to see if that will fade off and apply in every yen currency. or other currencies will remain a bit independent. So on the 4-hour chart, you can see sort of a triple top formation at 147.5. We've rejected it 3 times. Now we've started sliding lower. I think 145 is what we're looking for, at least short term. Observe what happens at 145. A break, we're looking for 142.5. A bounce, and we'll be looking for 148.75, 150 level, which is the next upside target. Finally, I look at Bitcoin. And Bitcoin, if I just look at it from the weekly perspective, last week we had the first week of quite some substantial bullish momentum coming back to the markets. Markets rallied from about 18,000 and something to trade as high as close to 21,000. We never tapped into 21,000 quite well, but actually we did. 21,000 was the level and started sliding lower. If I come back down to the daily, I'm looking for a potential correction first of all to about 20,000. I think there's a high chance we'll retest this level before the original move back to about 21,750 and probably 22,500, which is the next upside target. After many weeks of consolidation, I think a risk on sentiment is coming back to the markets, and people are starting to buy these markets as things get a little bit softer from the fundamental perspective. So the final markets that I look at is the dollar. I think the dollar is the king, and for this one I'll go to the monthly chart. I think there's something important going on in this market. So this market started a very big rally some time back in 2021 June. We've seen a very huge explosive rally without any correction from about 88 to trade as high as 112.5. Last month was the first bearish close at a major resistance level, both in the form of a channel formation and in the form of 112.5. And I think this month we could see some soft landing on this market. I think there's a high chance we could see this market start to come back lower. I think the dollar could come back to 105, probably if you take out 105, we could even probably tap into 100. But I'm not candid on some of these opinions that I have. I'm just following what markets are doing currently. If they change, I also change. So currently we rejected 110 last week. So you can see clearly last week we rejected 110. I still think we have a chance. We have a chance of this market sliding lower. For the first time, we got 2 weeks of bearish momentum, very good candles. This week, I still think we'll see some bearish momentum. We're waiting for what the Feds will say today. On the daily chart, I'm looking for this potential bounce, 112.5 retest probably before this collapse to the downside. 110 is the first target, 108, then 107.5 comes in as the second target for me on this market. So that's my outlook on some of these markets. I won't go to the yield curve. I think many people don't really understand how I personally use the yield curve, and I wouldn't want to confuse you. But those are some of the markets that I'm watching. Those are some of the perspectives that I'm watching in the market. So with that said, I think I'll stop there. I'll catch up with you guys on the next episode, and we'll be reviewing what happened in the markets and what is likely to happen in the near future. So see you guys in the next one.
Thank you very much for watching Financial Hub's content on YouTube. For more Forex analysis, financial education, podcasts, and exclusive content, be sure to subscribe.